Past necessary journal entries for issue of debentures for the following transactions. We've been given two companies, Kiero Ltd and Naro Ltd. Kiero issued 80,009% debentures of 100 each at par, redeemable at a premium of 10%. All right, so we will first pass journal entries in books of Kiero. All right, so journal entries in the books of Kiero, okay, Kiero Limited. Okay, and there are no dates, so we just go in for particulars. 80,000, 9% debentures of 100 each. Okay, at par, redeemable at a premium. So our first step is to receive the money. There's no application, allotment, first call, second call. It will be a combined application and allotment account. All right, so uh, we will debit what comes in. Bank account, bank account debit to debenture, debenture application, application and allotment, allotment account, right? And it is going to be 8,000 into the issue price. And since it's at par, 8,000 into 100 is going to give us 80 lakhs. 80 lakhs. Okay. Being debenture application money, debenture application money received. Okay. So once you're done with the first entry, you draw a line. And the next entry, we need to transfer this amount to the debentures account and also factor in that it is redeemable at a premium. Now, it's redeemable at a premium of 10%. 10% of 80 lakhs is 8 lakhs. The fact that you're going to redeem it in the future at a premium means it is a loss, and we debit all expenses and losses. Okay, so first of all, debenture, debenture application, application and allotment account debit, allotment account debit, loss on issue of debentures account debit, and we will credit 9% debentures and premium on redemption. Okay, we credit 9% debentures. Why? Because we credit what goes out. What came in is money, what is finally going out is debentures. But because we are going to repay more at the time of redemption, we are incurring a loss which we are showing in the year of offer, okay, in the year of issue. And at the same time, we are creating a liability, which is the premium on redemption of debentures account. Okay, two. All right, and there's no need for a comma. Let's see. Two, premium on redemption of debentures. Right, and now we credited 80 lakhs for debenture application and allotment. So accordingly, we will debit 80 lakhs. Apart from that, 10%. Okay, and going back up, 10% is our premium. So the loss is going to be 10% of 80 lakhs, which is 8 lakhs, as well as the liability in the future is going to be 8 lakhs. The value of debentures being issued right now is 80 lakh. Okay, so quite straightforward, standard journal entries. Okay, and being debenture application money, being debenture application money transferred to debentures, transferred to debentures account, debentures account, and premium on redemption of debentures account. Okay, created. You can write created. All right, and with that, we're done. Okay, the headache is actually learning the standard journal entries. Otherwise, it's easy. Part one done. Part two, we've got Naro Limited issued 50,000 10% debentures of 100 each at a premium of 5%, redeemable at a premium of 10. Okay, and we've had an MCQ in the same question paper where we had a similar application. All right, so I'm going to go to a fresh journal. Okay, and this time it's going to be journal entries in the books of Naro Limited. Right, so let's see. We have journal entries. Journal entries in the books of Naro Limited. Okay, and now we will have a look at the numbers. Okay. Right, so we are talking about 50,000 10% debentures of 100 each at a premium of 5%. That means if the face value is 100 and the premium is 5%, that means 5 rupees. Why? Because we multiply 5% into 100, we get 5 rupees. That means our issue price is 100 plus 5, which is 105. Why is this important? Because the money that we're going to get is going to be the 105 I've calculated here into the 50,000 that we have over here. Okay, and now I'm going to go ahead and pass the first journal entry, which is very similar to what we have done here. Okay, it will be bank account debit to debenture application and allotment account only. The only question is the amount, and that amount is going to be 50,000 into 105. All right, so we have bank account debit to debenture application, application and allotment account. All right, and remember, calculation one more time is 50,000 into 105. Okay, so if I had to do 50,000 into 105, all right, I think we are going to end up with 52 lakh 50,000. Okay, but please do the calculations yourself. 52 lakh 50,000. Okay, so this journal entry is the same as the last, is the same as the last sub question. Okay, but going forward, we'll have to make a couple of changes. Okay, so being debenture application money, debenture application money. We'll see. Now, The next part of this question involves a slightly different standard entry from what we have over here. Okay, and why? Because instead of it being issued at par, it is being issued at premium. So, frankly, it will be the same entry. Only thing is, we'll have one more person, which is going to be securities premium. Okay, we will also credit securities premium. And what I'm going to do is first I will make the standard journal entry and then we'll enter the numbers. Okay, so debenture, debenture. Okay, always remember we make a line after every entry. Debenture application, application and allotment account, allotment account debit to percentage debentures. Okay, and now it'll be a good time to check what percentage. Okay, so 10% debentures. Okay, remember last time it was 9% debentures, this time it is 10% debentures to 10% debentures. Okay, and before we go about crediting 10% debentures, we have to finish all the debit entries. So I'm going to leave a little bit of space and put to 10% debentures. Okay, and the reason for that is that we are redeeming it at a premium. Okay, so I'm first going to finish the logic where we debit the application and allotment account because we are completing a set of entries where we debit what comes in, we credit what goes out, and we credit all incomes and gains. The fact that we are able to issue the debenture at a price more than its face value is a gain. Okay, and that's why we credit it. This money at the end of the day is something that is a reserve that okay belongs that can be used by the company for its operations anyway. uh, this completes the fact that we're issuing it at a premium. The Now that we are going to be redeeming it at a premium, that involves a pair of entries, which we have done in the last question. Okay, we are writing loss on issue of debentures account debit, and at the same time crediting a liability account, okay, premium to premium on redemption of debentures account. All right, and the narration, okay, the narration for this is going to be similar to what we did the last time around. Okay, so being debenture application money transferred to debenture account and premium on redemption of debentures created. Right, so one more time, being debenture application money, debenture application money transferred to debenture account, okay, to debenture account and premium on redemption, premium on redemption of debentures. Again, just imagine how much we have to write. But I'm writing because this is what you're expected to do. Redemption of debentures account, okay, or simply redemption of debentures created. Okay, created. Now, the important part are the numbers. Okay, that 52 lakh 50,000 as it is 52 lakh 50,000 as it is gets copy pasted here. Then what else? Okay, that 52 lakh 50,000 at the end of the day was 50,000 into 105. Now it will be 50,000 separately into 100, which will be 50 lakhs, and 50,000 separately into 5, which will be 2 lakh 50,000. Okay, now going back, we have a premium also 10% of 50 lakhs. And 10% of 50 lakhs is 5 lakhs. So we can blindly put 5 lakhs here, debit all expenses and losses, and 5 lakhs over here, where we're creating a liability account. Remember, all liabilities by default have a credit balance. Okay, with that, we are done. Any doubts, feel free to message in the comments. And as always, like, share, and subscribe. Thank you.